The housing market has clearly woken up. I don't know if you guys were doing much over the weekend, but I would love to hear from you. If you are interested or working in the real estate industry, what happened this weekend? Did you have more activity? If you are an investor, are you seeing more competition? The reason I ask is I have personal experience, and my school community has highlighted a change in the housing market. For example, Austin, Texas. How many times have we heard that Austin, Texas is just a complete disaster? Again, this is only a single data point. That's why I am asking for more input. But right from our school community, a member named Hagen says that he's had a buy box with 5 homes as of last week. Many of them were 100 days on market. So clearly a stale market. Lots of opportunity for investors, disrespectful offers, follow up. You guys know the drill. This is what we do. But this weekend, all 5 went under contract. Interesting. Again, let me know what's going on in your market. Now, for my personal experience, many of you know that I've been trying to work a deal directly with Lennar, right? Lennar, the major home builder, the builder of the home that I am in right now. They put out a website where they were attracting investors. And there was a particular community in Henderson, Nevada, where I was looking to buy 3 homes. Now, as you would expect, I was negotiating hard. I was looking for a volume discount. I was looking for specific financing. I was doing what I do. And lo and behold, I got a text message yesterday saying that all three are now in contract. So again, very interesting. I want to know what's going on across the country. Again, the housing market appears to have woken up. The mortgage industry has clearly woken up. I heard from mortgage brokers all weekend about folks starting refis, getting re-engaged with purchases. So let me know what you guys are seeing out there. Remember, we have really kind of 3 important economic variables this week, and it starts tomorrow. Tomorrow is when we get the big jobs adjustment. Now, last year, it was 818,000 to the negative. Goldman Sachs says that it will be negative 950,000. Why is this important? Well, if we do get a monster negative reduction, this could cement a 50 basis point cut. In fact, if we were to rewind the clock 1 year, how did we get a 50 basis point cut last year? Quite frankly, the negative 818,000 jobs that just disappeared. So again, tomorrow is important. Goldman Sachs says 950. I say over 1 million. We are going to see a negative 7-figure adjustment. Even at 950, it will be the largest adjustment back to 2010. So buckle your seatbelts for tomorrow. And then on Wednesday, we start inflation. First coming with PPI. I will ask you, and I will certainly be paying attention to services inflation. I believe the media, and frankly, most Americans are focused on the wrong thing. Most of them are focused on tariffs. Tariffs equal goods. Goods equal 12 to 16% of our economy. If you want to cause an inflation problem in the United States, it needs to be services based. And last PPI reading was frankly ugly. So we need to watch the services inflation on Wednesday. And then Thursday will be CPI. We'll be paying attention to CPI core. It is expected to be flat at 3.1, meaning no increase from the month before. So those will be the last inflation readings before next week when the Fed gets together and decides, do they go a quarter or do they man up and go 50? So pretty interesting stuff. Mohamed El-Erian is out talking smack, says that the Fed got it wrong, and they got it wrong again. The jobs market is collapsing. He said the Fed should have cut in July and that they should seriously consider cutting 50 at the upcoming meeting. He doesn't believe they will, but again, Mohammed said they should. The Fed should look at this as a makeup for the mistake in July. A lot more people are talking about stagflation. Shout out Anna Kelly for bringing that topic to us first a year ago. People are talking about at least a mini stagflation, talking about job growth below trend, weak private payrolls, jobless claims creeping higher, manufacturing contracting, and finally, services inflation. I saw an interesting stat the other day that I have not verified, but it shows one of the reasons the housing market is broken. Apparently, 60% of homes are owned by people over 55. Now, again, I do not know if that's true, but it does make some logical sense. But that is one of the reasons the housing market is broken, because it doesn't allow for downsizing, right? If you are a baby boomer and you own a big home and the kids are gone and you have a 2% interest rate, downsizing could actually raise your cost of living. That's one of the things that could get unlocked if rates go lower. I do want to talk about our Las Vegas event coming up February 14th and 15th. It is now September 8th, and we have sold zero tickets in September. So besides giving you $100 credit and a special phone call in October with me, I'm going to offer 2 autographed books for the first person to buy the first 2 people, 1 autographed book each. If you ever wanted an autographed book, One Rental at a Time, or maybe my second book, 15 Conversations with Real Estate Millionaires, I have a special bonus. If you buy a ticket, the first 2 people to buy tickets in September, I will mail you autographed book. I want to get this process started. I want to sell this event out. So if you're coming and you could be cajoled into buying your ticket now in September, go ahead and do that, and I will mail you an autographed book. So hopefully that helps start ticket sales in September. Again, remember, for the folks that bought in August, you got an email from me Saturday morning outlining the process, and I will be going through the list later today to add some courses for you. Fortune magazine had an article out over the weekend talking about mortgage rates plunging to an 11-month low. And folks, based on the 10-year today, they're going lower. It fell 16 basis points on Friday, which is quite abnormal. That's a couple of standard deviations away from normal. 16 basis points took us all the way down to 6.29. Many lenders are quoting in the high 5s. So again, the housing market is waking up. The mortgage market is waking up. It'll be interesting to see where we go from here. We do have more and more people calling for 50 basis point cut. Again, folks, if you're on this channel, you know that I was one and only calling for that weeks ago. We now have Standard Charter expecting a 50 basis point cut next week, and Barry Knapp talking about inflation conditions don't exist and the Fed should cut 50. I did check the Fed Watch tool this morning. And last time I saw it, it was a 12% chance of a 50 and 88% chance of a quarter. Some things that we need to be watching is construction employment. This is something that I will turn to Lance Lambert from Resi Club. He did put out an excellent tweet this morning on X. From the peak, we are down roughly 4,000 jobs. That's a little bit less than 0.5%. In the residential space, we're down about 44,000 jobs, or about 2%. This is something important to watch, because if it does continue to pull back, this could push us into a recession, or given mortgage rates collapsing, maybe we will see more permits and more building. So we will need to watch that together. What else do we got? Oh, the bond market. The bond market is now saying we will get three rate cuts in 2025 and 3 rate cuts in 2026, taking the Fed funds rate to under 3%, about 2.83%. So very, very interesting. Again, folks, I do want to congratulate one new school member, John. John, thanks for joining. Make sure you introduce yourself. Again, folks, if you are a wealth builder, you clearly need to be a part of our school community. Nearly 500 amazing folks go in the same direction. You can ask questions. Just this morning, We had questions about painting on a deck. We had questions about the Austin market and many, many other things. So do yourself a favor, get around other people that are building wealth. You will enjoy it. And if not, you can leave. It's just a month-to-month commitment, 67 pennies a day. Again, folks, remember, buy your tickets to Vegas. If you are the first couple of people to buy, you know what? I just changed my mind. We'll do 5. The first 5 people to buy tickets in September, not only will you get $100 in free teachable courses, not only will you get a very intimate conversation in October with me, but you will also get an autographed book. I want to make sure these sales start happening in September. So link in the description. Join school. Also, again, folks, if you are a landlord, you need to check out Steadily. They are getting a chance to quote every policy I have. In fact, I just sent them a duplex this morning, actually late yesterday, in fairness, late yesterday to quote to see if they once again can beat on price and beat on coverage. Link in the description to start the process. Folks, take care of yourself. Have an amazing day. See you in Vegas. Bye.